Thank you very much. My name is Yogesh once again, and welcome everyone to this webinar. As I see a lot of faces a lot of people, a lot of names who were here before, and thank you so much for coming back to this webinar. I think what we have tried to do over the past few weeks after the pandemic we have tried to be spreading more awareness about how markets have been going on. We have come up with different topics every time, and it's great to see all the people joining. A lot of people, there are a lot of new names I see. There are a lot of people who have joined today, who are looking forward to understand what I have to share today. Normally, it's in a form of a PowerPoint presentation, but I think there is some difficulty. So I have just converted my presentation to a PDF. So I'll be running this through. Uh, Please, to all those people who would like to have a copy of the presentation, better that you can click a picture now and then again talk to your relationship managers, and they will guide you towards a better understanding of what we have discussed. If anytime you want to understand more about what we are discussing, please book your one-on-one sessions, and I'll be available to discuss things with you. So, to begin with, as I said, that we have done a series of webinars since the pandemic, and the objective and the purpose of these webinars have been very simple: to spread more and more awareness about what is happening, because there are a lot of events coming in, and we'll today discuss about most important thing. The agenda of the webinar was decoding equity markets, what's next for global stocks, because that is something which we are hearing right now. Because in last few days we have seen that the equity markets have dropped, and when I say equity markets, that means I'm talking about stock markets here, right? Stock markets, when we say stock markets have come down a lot, we have seen significant drops in tech stocks. And over last 2 weeks, we saw stocks like Apple, Microsoft, Alphabet, these shares coming down. And these were the same shares which rallied. I'm talking about Tesla, I'm talking about Zoom, I'm talking about so many other companies. So everybody has the same question in mind. Should I invest into stocks now? Should I wait for market to fall further? And to answer these questions, I'm here with a bit of explanation of, to give you some light of what is happening. Now, before we start, please take a moment and to read that the nature of these investments is very risky, whether it is stocks or commodities or any strategies, which I'll be discussing it with you. The nature of these investments is extremely risky. So please do not consider this as a recommendation or as any type of suggestion or advice. I'm just here to share my views about how the markets are going on the basis of some historical data and some facts, what we expect through our research portal. We have tried to, make a certain amount of report, which we'll be discussing it with you. And if you are willing to invest into these things, please consider your risk first. And always remember that these kind of investments are subjected to a lot of market risk. Okay, so they can fluctuate a lot depending upon how much you have invested, what is your investment size, how much risk you're willing to take, everything. Do not take money, borrow money from anyone. Do not take loans and try to invest into these markets. This is not something which you take a loan for. So be very, very informed about the risk and the rewards, right? Now, the question of the hour, as I said, that should we be willing more into to invest into stocks? First, to give you a recap was what has happened. So what I'll be doing also side by side, just let me switch on to my real-time trading platform, where I will be able to share the current stock market updates, the prices also. And if you have any requirements, if you want to see the chart of any instrument, or anything, please let me know. I will be able to, through the chat option, you can send your questions and queries which you have. I will try my best to answer it. And at any point of time, if I'm not able to answer it, somebody from my team will definitely reach you out with a proper answer. So that's the hope. I used to do a lot of seminars. Now, because of the pandemic, we have come down to webinars here, and we are just willing to spread more and more awareness about the current market volatility, and that's the idea of this session also. So please write on chat. Before also we proceed, can you just give me a okay or a yes if you can hear me properly, if you can see my content, what I'm showing it to you? Just give me a yes, so it's easy for me to proceed further. Okay, okay, done. I've got 8, 10, 11 yeses now. So I'm assuming that everybody can hear me. Uh, so guys, now we'll start with the first thing. What has happened in last 1 or 2 weeks? So straight away, I'm going to show you a brief history of the markets here, and I'll be switching between my presentation and my platform. So please bear the transition. Here. So now what you are seeing right now is a live platform, and I'm just putting some live charts over here where you'll be able to see the movement of the market, what is happening, and we'll go through a lot of asset classes here. Let me just maximize the chart so it becomes easier for you to understand. Now, what you see, I've just opened a random chart for Tesla, but let me give you a proper synopsis of what has happened in last 2 weeks, because that's more important, much more recent. I'm showing you S&P 500, which is so S&P 500 is the global benchmark of US stock market indices, which means this particular index tracks the performance of 500 companies of US. And these are not companies which have a smaller market value. These are the companies like Facebook, Apple, Netflix, Tesla, Boeing, right? These are the companies, 500 such companies which are very active in market. So I will show you what has happened in last 2 weeks. And since we have opened a long-term chart, let me just tell you, I hope everybody can see this big fall which happened. And can anybody guess uh, what is this? What is this big fall from here? 3,394 and a drop 2,250. There was this big decline which happened. Can you guess what month it was around? Let's make it more interactive, guys. I know most of you have attended my seminars as well, so you know how it goes. I'm looking forward for a proper chat session. Please ask me questions, and let's try to make it more interactive through votes and polls and more and more questions. What do you think? Which month was this when this such a big fall happened? Just think. It's very easy. What I'm asking you is this big decline which came. This is S&P 500. Yes, consider this as US stock market. So this is a big decline. What month this decline came in? I'm showing you a 10-month period from December 2019 to September 2020. Which month do you think this was? Okay, okay, okay. Great, great, great. Absolutely. So most of the people, Feb and March lockdown, March, February, March, April. Yes. So February and March were the two exact months, and this time there was a big pandemic which hit all of us, and something which have been very unfortunate. But this was the time when the stock market started coming down. Now, if you see the decline which happened between Feb and March, if you see from March till September, look at this graph, and this is the major index of US. I'm talking about S&P 500, which is the global benchmark for US stocks. These stocks have moved up from that decline and has gone to their all-time high. Let me show you all-time high of S&P 500 because this is just 10 months. Let me take you 2 years, 3 years, 4 years, 5 years, 6 years. As you can see, the highest S&P has touched all-time high was on 1st September 2020. And if you see here, this was the pandemic fall, 7th Feb, it went down to 2,100 and now it is 3,500, right? So what I'm trying to tell you is markets have gone up by 50% from its lowest in March 2020. In March to September, June, July, August, September, 3 to 4 months, markets recovered by 50%. Had you invested during the pandemic, I'm not saying that obviously it's very difficult to price the bottom. You cannot price the bottom. You don't know that when markets have bottomed out, right? Right now I'm showing you that bottom. Technically, if you see on the chart, it looks like a pretty great support on a long-term chart. If you see it here, so one was this right here, which was 2570. We saw that it broke down once and then again recovered, and then again during the pandemic it came down and again recovered. But then if I had to see another support, this was just the lowest which it went as compared to this line. So this low, and S&P went to its previous all-time low and then bounced back to its new all-time high. But then again, as I said, it's difficult. It's easy to draw lines now and see the historic trend, but then with the proper psychology of investors, it's not that easy to enter and understand that markets have bottomed out. So over here, what I'm trying to show you is markets came down during the pandemic and it bounced back. There was panic, there was uncertainty. People were thinking, oh, now it's going to go down further and further and further. But then, did investors buy? They did. Those investors who have not, so investors who bought during the pandemic have made more money than the investors who bought an year ago and were holding for 1 year. Surprising, right? So the point is that every volatility, every uncertainty has a hidden opportunity there. So today's topic, that is, are stocks still a good investment asset class? Is it still good to invest into stocks? The answer is there is always a good time to invest into stocks. It is just when markets is all time high, then you invest a little. When it is all time low, you invest more, but always invest. Because what happens, you might be waiting for the right time to enter, but there is no right time to enter. You will always be exposed to a certain amount of risk, especially in the world like today. We have pandemics, we have trade wars, we have Brexits, we have Donald Trump, we have US elections, we have so many things. So technically it's not that easy to bottom out the markets, and that's why you always keep yourself open to information about new businesses which can be a good opportunity for the future. Right now, one such opportunity is coming in October in the form of the earning season. Okay, now what has happened in last 2 weeks, what we were discussing about, this is 1 week, and look, markets dropped around 11th of September. And even before that, if you see, this month of September has been a roller coaster ride, because 3rd September, markets started coming down. And by 10th of 9th of September, from 3,600, it had already fallen down by almost 10% to 3,300. And then it went up to 34, again came down to 33, and now it has again come to 34. And if you see, there is a small resistance over here, which you see there, which is not able to which is not been broken yet. If it gets broken and goes again higher, we might see again the all-time high. But still, if you see this line, this is still a resistance. It's not able to cross that line. So this has happened in last 2 weeks, from September 1st September 3rd to September 15th, we saw stock markets coming down almost by 10% and then coming up by around 2 to 3% up. So during this time, all the stocks, let's see what happened to Microsoft. Similar time period, if I say last 1 week and then zoom out from 3rd of September, look here, Microsoft was $232 per share. It came down to $201 per share, went up to 213, came down to 201, went up to 209, came down to 204, again as now it's 209, right? So we can see the decent buying levels, short-term decent buying levels around 201, but also around 205. The highest it came down from in last September was 232. If you zoom this out, you will see that from August till September, it 27th August, it reached 230 and it sustained this level till September and when markets came down and now it's here. Okay. And entire last from March till September, if I show you the chart for Microsoft, it's right here. From June, July, let's see from June, 197 is the low, highest 214, again 202, again 212, now again 200, 201, again up to 216, then low 203, and then again significant high over 230, now came down again 201, now it's 209. So this is how, what you understand is whenever there has been a decline to 200, 205, 209, it has presented with good short-term buying levels. So these are the things which has happened in last 2 weeks. Markets have come down, and the question which everybody is asking is that if I have to buy, then should I buy Microsoft? Should I expose more into tech? So guys, I have a couple of shares which we have done some research on, and I will share that information with you. You can see your risk and then decide how to proceed. Because what happens here, tech is one of the most booming industry. I showed you chart of S&P 500. Let me show you the index which is heavily tracking the tech sector. Nasdaq. Nasdaq has so many technology stocks, and as you can see, let me show you the movement in Nasdaq. From 3rd September, Nasdaq was 12,400 and it came down by 9th of September to 10,964, right? This is a big decline. Again, it went up to 11,500, it came down to 10,974. Then again, it went up to 11,500 and now it is 11,400. So it is still not back to 12,000, and it was the all-time high for Nasdaq, which it has reached because tech industry has been going higher and higher even during the rumors of a second wave coming in. Amazon, Apple, Tesla, these stocks even went up during the pandemic also. So tech industry is something which have been kind of resistant to what has been happening in the economy. The sectors which get affected the most are obviously the sectors which are involved into social distancing. I'm talking about transportation. I'm talking about travel and tourism stocks. So these kind of companies, they always get affected, and we always see that whenever a recession comes in or a pandemic comes in, we have to very carefully choose which sector we should be inclined towards most. Now, if there's a recession or a pandemic, uh, there are always issues with salaries and jobs. Unfortunately, so many of our friends went through job cuts or salary cuts, right? Uh, so during that time, the demand for luxury products may not be a right idea, or luxury product companies may not be a right idea to invest into. So what you do, you invest into companies which are much more non-cyclical in nature. Don't invest into consumer discretionary. Don't invest into luxury stocks. Don't invest into luxury and brands, because most likely the demand for them is expected to come down, right? So moving further, what is the opportunity which is coming in? The opportunity which has already started and it will continue for the month of October. This is called earnings season. Okay, we did a webinar on earnings season before. That was a quarter ago when in July the earnings were coming. So every publicly listed company in US is obligated to share their results by the end of the quarter because they have people's money in it. So they're obligated to discuss results with people, that how much money they have made, what is their revenue, what was the expectation, and have they beat the expectations or have fallen low of expectations, what is their long-term plan, what are the new products coming in, and etc. So this kind of information is shared always during the earnings call. Every company has a defined day when they are going to come up with their earnings, and the stock price moves a lot depending on the earning surprises. Now, what are these earning surprises? Earning surprises means that a bunch of Wall Street analysts, they studied the financials of the company, they have studied their procedures, and they have come up with a number that this company with this kind of capital and equity should generate an earning per share of X amount. And that's the expectation of the Wall Street analyst. And now, when the company declares its actual results, if those results are more than the estimates, then they have outperformed the expectations. The stock should be expected to go high. But if they have performed below the expectations, then the stock might be expected to go down. That is just one thing. Second thing is you talk about their revenue. Revenue today, revenue in this quarter, and you compare it to the revenue to the previous quarter, and revenue to the same quarter but last year, and you see that how they have performed. So that is also a deciding factor in stocks going up and down. Right now, today what we'll see, that now what is coming next in October. So there was last earning which was in July, August, September. So we are looking now to the next earning season for Q3, which will be in October. Okay, and then October, November, and December, and we'll see again January coming up with their earnings. So this is something which happens every quarter, and let me tell you, the movement which happens in a stock at the span of every 3 months, it is amazing. So if I just give you a good example, I'll show you Tesla. Let me show you Amazon for that matter. And I want to actually segment this into 3 months, and I think that should be easy for me if I, okay, let me do it day wise so I can segregate. So first earning for Amazon should be in January. So let me just cover the area for those months, that how Amazon has performed quarter on quarter. I think this can be an easy way to do it. 2020 started January. So from the beginning of 2020 here, okay, Jan, Feb, and March. Now, if you see Jan, Feb, and March before April comes in, right? So this is Jan, Feb, and March. If you see the movement from $1,700, let me select the crops here. From $1,700, January was Amazon must have declared their earnings, and from January 1700, and you see this big gap. This is possibly because of the earnings. You see this big gap here. This is possibly because of the earnings. The earnings came positive and the stock went up from 1800, went to 2000, and it reached 2100. In the beginning of the year, it was 1880. Earnings came, it went to 2100. Then it did come down during March, pandemic, 1680. And then April happened, which was the new earnings. So Jan, Feb, March, and now April comes in. So April will be again a earning season. Now see what happened here in April. April, May, and June before July comes in, right? So you see this April, May, and June. So when April earnings come in, this is the time when earnings came in April. From 1900 went up to 2400, and then till June it went to 27, and then July happened again, earnings season, and now you see July, August, and September, right? So if you see here, quarter on quarter earnings comes in, earnings is positive, growth happens, and it goes. So from 2020, the lowest 1600 has reached to 3500 over a period of significance. So the next 3 months will be deciding. Now October again earnings will come in, right? If the earnings beat the estimates, then again we might see a further rally in Amazon on the higher end. So this depends a lot on how the earnings happen. That's why we have to understand that every time when we are looking at the earnings, when we are looking at the results, we have to interpret it properly, that this was the expectation and this is what had happened. Now similarly, if I show you example of, so anyone wants to please request me a company which if you think may have performed poorly or well. If you have any company in mind, you want to see what was the impact of the earnings. Maybe it was positive, maybe it was negative. If earning was bad, the impact would have been negative. Please write any company which you feel I could see the chart on, so you can see live that what is the impact of earnings, because it's a very important thing. This is earnings have already started. Um, uh, okay, somebody is saying Apple. Anything else? Because we will see a lot of movement in these stocks. Okay, somebody said Boeing. For 1 second, I thought somebody wrote boring, and I was like, oh, I have to do something about the session. Okay, Boeing. Yeah, I'll show you. Let's see Boeing. And now again, guys, Boeing. Let's face it, it's not a very popular sector at this point of time because of what has happened in the pandemic. You can see there's a big fall on February to this 105. But let's go to quarter on quarter performance. This is 2020 right here, and I will see how this has performed. Now, if you see this from 2020 in the beginning, where is December, and here is January, right? Now I will do January till March. I mean, till the starting of the April. So this is January. Look at this. Until April, 1st April, April begins. Now, 1st April, the price is this much. Now, what you need to see is on January, you must have seen price was 337 and it came down to 314, from 337 to 314, and it has then gone up to 346 before. So this is where the earnings came between Jan Feb. Okay, so the prices from 320 it went down to 308, went up to 344, and from there this big gap which you see from 350, it has come down to 96, and that's the pandemic fall which we saw. And from 96 in April it went up to 180. Please look at this. 23rd March Boeing was $103. 26th March Boeing was $183, right? This is something which you need to understand, because guys, this was the end of March and April started. uh, Boeing earnings Q2, I'll show you the exact date. So if it will be, I think, Boeing earning Q1, which will be the exact date of earnings. And the revenue, there was a loss in the revenue. Their earning per share was also down, and you would see, I think, somewhere around April 29th is when this happened. So now I will show you on the exact day what happened to Boeing. 8th, 9th, 17th, this 26th May, 5th May, this is 29th April right here. So as you can see here, over after 29th April, when the earnings came, we saw the decline from 139, it came down to 113, right? And then again over a period of time, it started bouncing back and it went to 229. And then came July, again the earnings came right here, as you can see, and then it has again bad earnings. It has come down 150, and then again. So obviously, Boeing as a stock has been affected by negative earnings a lot because of the pandemic. The sales have been affected quarter on quarter. The lockdown happened and everything. So why earnings is important this time, and you will see if you have any other stock in mind, I can show you different stocks and how during the time of earnings over the next 3 months their trend has been set. Because if earnings are really good and revenue is really good, earning per share is really good, then you will see uh, their course is decided for the next 1 or 2 months, because uh, investors have a lot of faith in those companies, right? So now what is happening, let's get back to the point, and this is where I will just switch to my presentation here. Now what is happening is, in October earnings are happening, and what we will see, earning season, it's a great time to scour Wall Street for stocks to buy on the dip. The earning expectations now, when what is expected in Q3, first of all, the very basic thing, in second quarter, with the second quarter earnings were in July. Okay, now second quarter earnings were in July, which means Jan, Feb, March results will be disclosed in July. Oh, sorry, March, April, May, June. April, May, and June results will be declared in July. Now, April, May, and June, most of the 3 months, that's where the economic shutdown was. So, naturally, we will see July results lower than the expectations. So, there was an expected expectation that there will be a decline of more than 25% in the Q2 earnings. Similarly, this time in Q3, it is expected that there will be a decline of around 23.9% in the earnings of all the total aggregate S&P 500. Now, this number was 31% in the beginning of 2020, which has come down to 23, which is a good thing. And in July, the markets reopened, the economy got reinstated, a lot of things started. So we can see this time a lot of companies might come up with a surprise in the earnings on a positive side, right? I'm not saying all the companies, but there's a possibility, because April, May, and June there was a lockdown, so July results were not really effective. But then July, August, June, July, August, there has been, or July, August, September, the earnings have been going on. The world has got reinstated. The economies have reopened. So we can expect numbers in October. However, uh, so the big banks like JP Morgans and Citigroups, they will come up with their earnings around 20th of October. But till then, a lot of companies would have already come up with their earnings. So it's important for you to see, because some companies have already started. Companies like Adobe. If I show you Adobe, let me switch to the platform once again. Here it is. Look how Adobe has performed today, because Adobe, the earnings have come. So today, if you see, the stock is almost down by 2%, and this is how it has come up with. Look, 530, it started at 504, and then it has been coming down to 479. It is 488. So today it is down by 2.2%, right? So this is because, now if you see their earnings today, Adobe earnings, their quarterly revenue was around 3.23 billion in its third quarter. Now this is a year over year growth. Okay, so I'm just reading out, in during the pre-market, when you see most of the stocks moving a lot, the shares, they rose up 3% on the revenue, and earnings, they beat the expectation. So they have disclosed, they have reported a net income of $950 million. Their revenue has gone up to a record of 3.23 billion. This year ago, this was 2.8 billion. Now it is 3.23. Even the quarterly estimates for the next quarter, like the fourth quarter, the guidance is still above. And for Adobe, we have like they have seen that normally Q3 is a seasonally it's a slow quarter for them, but then small businesses, education, digital tools. So what has happened? What was different in Adobe this time? Normally their third quarter is slow, but what you saw here was during the pandemic, a lot of people started using digital tools related to say DocuSign or other things. Uh, Education institutions, they started using a lot of digital tools. So Adobe have actually earned a good amount of revenue on that. And this is a long running trend because everybody is going to be using these kind of, take Zoom for example. These kind of technology is not going anywhere because now people are more cautious. Even when the pandemic is gone, uh, the mask is here to stay for a long period of time, right? So this is something what when you are looking at the earnings, you get to know so much about how the stock has performed, what is their earnings, and how much it has improved. So this is something which you can always look into when you are checking the earnings bit, right? So such stocks have already started coming up with the earnings, and you will see later on Google, Apple, these stocks will also come up with their earnings. So always keep a check. Now, coming back, this October, obviously there will be some positives, but there are few sectors which might still see a negative trend, and those sectors are related. Or when I say negative, which means much more weaker sectors, which might come up with not a very convincing earnings. Transportation, we have seen obviously transportation has been hit a lot. Even in last 3 months, transportation has been hit a lot because people still have fears to use the public transport, and there are so many international restrictions in terms of international flights. They're still restricted, so the earnings for the transport might still be an issue, might not be convincing. Then the energy sector has also been affected. A lot of oil companies have come down off lately, like Exxon, Chevron. These kind of stocks have come down a lot, and oil prices dropped on the fear of a second wave coming. And that is also one reason that we might see a slightly weaker forecast of the energy sector. Last is consumer discretionary. Consumer discretionary is your luxury brands. So last 3 months, uh, it's not necessary that people would have gone for buying luxury brands. So that is also something which might see a weaker growth outlook. So your focus should be on medical companies. Your focus can also be on financial companies, right? When you are using the earnings. So what will happen is please talk to your market consultants, and you can speak to them, you can check with them that which will be the stocks to put a focus on during the earnings, because the companies which would have done good in last 3 months on the likes of Amazon or Apple or Tesla for that matter, they have continued to give earning surprises. So there is a possibility that those kind of companies might continue to give better. But again, that being said, you have to be very careful from transportation, energy, and consumer discretionary based companies. Next, so you have one opportunity which will be in October, and it has already started because stocks like Adobe and others have already started coming up with their earnings. So you need to understand that if there is a decline in the stocks, because stock markets have fallen down in last 2 weeks, and if there is a decline in the stocks, uh, it's could be a decent opportunity to capitalize on the earnings season, because the current fall tomorrow, if the earnings comes good for these companies, and who are already good companies, they have a lot amount of cash but they're just down due to the market trend. If their earnings come well, then they might bounce back. So do your research properly, talk to our experts, understand your risk, and then decide that which company do you think could be good. However, I have a list of certain companies which I would suggest if you want to have a look, You can click a picture, but as I said, before you decide whether you want to invest it or not, you should judge your risk properly and then get into it. So I'm looking at a couple of companies, and these are the companies which I've talked also earlier. If there are so many of you who have joined this webinar before, also I see some familiar names. I see a lot of new, names as well. But those who have seen this, I have always a lot of times I have discussed about Zoom video communication. And it's been from April when the pandemic happened and people switched to Zoom videos. Uh, Zoom last 1 year growth has been around 409%. Now that is phenomenal growth. Uh, the company it got live in last April. If you see the growth from last April, it has gone up by 1000%, and that is last April. So this is even a 1000% is it's an amazing bounce, right? Now what we have to understand is see Zoom, it's a go-to solution. It helps people collaborate face to face over the internet. Even now, also, if I have to, I cannot FaceTime, I cannot do a live video, I can call my home, I can just send them a Zoom link and we can connect everyone. This is something which has become a trend during the lockdown and it continues. We are doing so many meetings through Zoom itself, and I'm sure everybody else is. So their revenue has dazzled investors. Like their revenue has grown, their users have grown, their profits were grown because a lot of people they stayed at home during the pandemic. So obviously the company has made a lot of money. Their second revenue has, like if you see the second quarter, the Q2 revenue, it has gone up by 355% to an exact number will be around, I think, $660 million is where it has gone to. So this is something, again, guys, which you can see. These are the numbers which you can find it anywhere. You can talk to experts. The revenue has soared by 350%. uh, if you see, their cash flow is really good. The kind of customers they have, they're paying them monthly, and it's not something which comes in advance, because everybody's having Zoom subscriptions month on month. Even if you pay it for annually, you pay it at once. But there are a lot of companies which are paying Zoom for month on month subscriptions depending on their usage. So this is something which is, again, good. uh, if you see, earning per shares have gone from 8 cents a share to almost 90 cents a share. This is something which is really amazing. uh, the management is expecting a very good profit in 2021. Their revenue is expected to go up almost around 2 billion, $2.5 billion. This is something which is really good, because earlier this same revenue which they are expecting 2 billion, this was around 1 million. So now they're expecting a lot. They're expecting around $2.5 billion of revenue. This is something which is phenomenal. The business is growing really wild, and this stock has gone up completely high in 2020, right? And nobody would have imagined this, because when you think about this company, like, no one thought that when you find a shelter at home, this is the company which is going to get benefited, right? It will give you a solution to work from home. uh, and if you talk to the CEO, if you when you see what their CEO talks about the company, their third quarter earnings is also about to come, and he believes that there will be a spike in adoption of the video collaboration technology, and it is here to stay. Even after the economy reopens, it is here to stay. So of lately, the Zoom prices came down almost by 20%, and this was 2 3 days ago. And then again we have seen an increase in the stock prices, which has it has gone up. So obviously, when you see a stock which is almost up by 400% since last 1 year, you might think that valuation is a little high. But with the kind of business model Zoom has and the kind of world we are living in, I think uh, definitely worth buying, as long as the position is kept moderate and investors they are planning a long term perspective. Please understand this thing. The kind of things which I am talking about right now, these stocks, they will have certainly a long term perspective. You buy and keep it, it might bring a decent amount of revenue. But again, please understand, market fluctuations are a lot in these companies. As I said, it went down by 20% few days ago, and then again it bounced back, right? So this is something which you can definitely look into. One of the best companies we have seen in last pandemic, it's been soaring high. When it was $200, people thought it's too high. When it was $300, people thought it's too high. Now it became $400, $450. So just understand this thing. It's a futuristic stock. Even if you buy it comes down, you need to understand what it is going to serve and what kind of situations uh, it will affect, right? Moving on to another company which we have discussed, since the topic was, are stocks worth investing into? So I'm giving you some companies which you can look into. Now, this is a bit new. When I say new, that means this is something, a sector which has been very less discussed in my previous sessions also, but then it completely makes sense when you see it. The stock is called CrowdStrike Holdings, a company which gained a lot of momentum. 1 year growth is almost 93%. The stock has gone up by 93%, and the stock has they have made its own place, because when we talk about cybersecurity, and the cybersecurity, it is a highly fragmented uh, sector, and this hasn't, like, if you see CrowdStrike as a company, this fragmentation has not stopped CrowdStrike from growing its business, and they have grown it rapidly. They have doubled their market share since last year, and they have a lot of, like, for example, if you understand Salesforce, for example. So what Salesforce.com is for CRM, right? If you see ServiceNow is a company which is for service management. If you see for HR, that is for Workday. So similarly, CrowdStrike have made its own place. Now, this is something, the trend of this growth of capturing a higher market share, it will continue, because they are operating at a scale which is really easy to deploy on a fully remote basis, and the work from environment is there, and they have like roughly $27 billion of value of lately. It is, of course, when you see the total valuation, you will understand that when we talk about tech sector, we always think about how overvalued it can be, right? So it is not something that CrowdStrike is immune to the tech sector meltdown, because everybody has this thing that if there's a tech bubble, if it bursts, stocks will come down. So my tech stock will also come down. So that is always a risk which you're facing, because these are tech stocks. It's not immune to that kind of meltdown. And there will always be a lot of stress. But the beauty of cybersecurity stocks, what is one this significant factor? The beauty of cybersecurity stocks is that, and like just like healthcare stocks, it's a basic need at this point of time. And no matter how good, like how rich or poor the US economy is performing, hackers and robots, they don't take time off. Hackers do not see, oh, economy is performing really well, I do not need money. That is something which is always happening. Business of all sizes, they have to protect in-house their cloud services. So imagine how you have antivirus for your laptop. CrowdStrike will provide a kind of antivirus for your cloud account. Everybody has cloud. Everybody has virtual storage where they have kept their data. Big businesses. So CrowdStrike is like providing antivirus to that cloud, and that is something which is phenomenal. So that is why, again, this is one company which you can look into. Again, guys, as I said, please understand your risk and then accordingly move into. So far, guys, I'm sure I'm talking a lot here, but if you have any questions, please send through chats. I'll try to answer it while I'm doing this. If you have any questions regarding anything in terms of investment, I'm here right now. Even if you are short on time, or if you're not able to get this telecast properly, don't worry about it. You can have a one-on-one conversation with me. Just talk to your relationship managers and I'll be available. Moving on to another company which has captured the attention of many people, and that is Big Commerce Holdings. Now, Big Commerce Holdings, as the name suggests, we are talking about a sector which is e-commerce, and e-commerce is something which has gone up a lot. E-commerce as a huge sector in itself, uh, around I think 2018, 40% of small businesses, they did not even have, they did not had any websites, because e-commerce has remained completely niche since 2018. Now it's not like that. Now if you see, I mean, because we should say maybe thanks to the pandemic, the adoption of e-commerce has accelerated. And I give you one very good example. My father, he has a business of textile and garments back in India. And due to the pandemic, obviously the business has taken a hit, because the retail has completely got affected. Wholesale has got also affected. But then what we have done is we are completely transforming. We are getting into digital media, trying to form e-commerce platform and do it online. So smaller businesses, bigger businesses, everything has moved on to e-commerce with the novel COVID pandemic, right? If you talk about small businesses, you talk about mid-sized businesses, they have begun to swarm to e-commerce, and this is the trend. It's not going to slow down even after the pandemic is over. Over the next decade, it will just accelerate to the point where websites will become the new storefronts. Most of the retailers will be doing most of their business through them. That is something what the transformation I'm talking about. So to build that kind of e-commerce operation, it's not that easy. And imagine why these small and mid-sized businesses, they start flocking to e-commerce platform companies. So like Shopify, Big Commerce, these kind of companies, they will help the smaller and medium-sized businesses to bring, to build a strong retail business, right? Shopify, for example, it has become the king of e-commerce platform market. Obviously this market is not like one person can win it all. Of all the small and mid-sized businesses which are rushing into e-commerce platforms over the next decade, not all of them will choose only Shopify just because there are other platforms out there. There are different features, which might appeal more. So this is something, again, guys, strongest of the other platforms is the Big Commerce. They have a very solid positioning in the market, 60,000 plus oil online stores. And where Shopify would take a 0.5% to 2% commission, Big Commerce features zero transaction fees. This is something which is very good. They have a lot of listing options. They have multi-currency solutions, tiered pricing structures, so many things, right? So that's why this is, again, one company which has captured our attention. And again, you can please do a proper research about this, and then see if this is something which can work out for you. Year over year, if you see last 1 year growth, it has gone up by 14%. And again, as I said, I'm looking at it from a very futuristic point of view. So please keep your options open and just see. Next, what has something kind of made it into the portfolio? I think Datadog. And again, guys, these all are tech companies. We'll also discuss about some clean energy, which is also very important. There is one company which we went through, and it's a clean energy stock. So apart from tech, we'll discuss about a clean energy company also. Datadog, again, the stock is up around 97%. Since its IPO, the stock has gone up by almost 40%, right? So this is something which also you can see, you can read more about what Datadog is. And I think they made their public debut not hardly a year ago, and they have done really well because the stock was priced, I think, around $27 during IPO. It has gone up by 40%. It has never looked back, even the pandemic. So same thing, remote work made their services more and more valuable than ever. So their shares are up by 115% this year. And what has happened, now if you see the IT departments in every company, uh, they have become very decentralized. A lot of people are now working from home. if you compare it before. And it's very important for companies to stay on the top of their cloud computing operations. So demands are increasing for this, and more the remote workforce is way higher. So obviously the demand is also increasing. It's really important. It's very crucial that you keep these kind of systems running at the best of their frequency. I am using a platform here, and I am doing so many trainings on web. So it's really important for our technology to be top notch, and that's where Datadog comes in. Because if there are any issues in achieving that kind of efficiency, or if there is something which is reducing down the efficiency, that Datadog as a company can resolve those kind of issues, and they can monitor, they can find out statistics and analytics for developers, IT departments, just to keep a digital eye on how the servers are working, how databases are working, how their tools are working, right? They have got a good revenue, around 360 million revenue in 2019, but then this is nothing if you compare to the massive opportunity which they have. The management of Datadog, they're expecting around a target market of $37 billion by 2023. And this is something, again, it shows that Datadog has a lot of potential. So I'm not saying that it's a very cheap stock. Because if you do a valuation, you might find its valuation higher, okay, as compared to the competitors. But that doesn't mean that the stock is not appealing. If you have the stomach for volatility and price movement, a proper long-term horizon can be considered for this. But please, as I said, consider your risk and then talk about, right? Please, guys, I am continuing to just remind you, if you have any questions, any queries, um, please write on the chat, and I'll be able to answer your questions. I still see a lot of viewers, a lot of listeners online, and I hope that I'm able to make justice to the time you have spent here. I will just discuss a few more stocks over here, and still open to questions. So the next company which we are looking at right now is Etsy. Etsy I have discussed before as well. Etsy is up, by the way. I've discussed it in last so many sessions about Etsy. Again, it's an e-commerce website, but it specializes, and it's a very niche. It specializes in handmade and vintage goods. If you're on your system now, you can go to Etsy Inc. right now and see what kind of products they're making. They're making really good handmade and vintage goods, and this is something which is really unique. And if you see, I've added here that 90% of Etsy customers, they've surveyed, agreed that Etsy has items you simply can't find anywhere else. So this is something which is, again, and they have started expanding to retail categories into different countries. Since quarantine, the shares have surged by 200%. uh, Year on year, the growth is 91%. So what I'm trying to tell you is, this is something, again, a unique product, a niche e-commerce website. And Etsy, I have discussed a lot of times. Those who are familiar faces, familiar names, you would know. We've discussed about Etsy a lot of times, and it has continued to go high. So this is, again, something which you can look into. So I was talking about clean energy. Clean energy is also something which we need to discuss. Workhorse Group, it's a commercial van maker, and this is one of the grand leaders in electronic vehicles for last mile delivery solutions. And EV is something which is here to stay. And I'm sure a lot of you must have seen Tesla. So how Tesla has rallied, and the stock is up by almost 45%. It has shown phenomenal growth, uh, uh, just like Tesla, anyways, have gone up a lot. But then, if you see companies like Workhorse Group, now the thing about Workhorse is, see, electric vehicles in itself, it makes a lot of sense in commercial application. Uh, People are switching so much; they're trying to save energy. They are switching from personal cars, they are going towards EV vehicles. And again, electricity to charge the batteries typically cost less than the amount of gasoline. I know gasoline prices can fluctuate from 100 to negative, what we have learned in April. But what I'm trying to tell you is EV is something which people would be much more fond of or familiar with over a coming few years. So this is something, again, just like Tesla, this is one of the great companies to work with, because they are directly competing with the giants, and they are making delivery vans. So this is again something they've started delivering its C series electric delivery vans to customers, and they have been working on these vehicles for years. So it is not something which has come now. They have worked for a very long period of time. Um, the electricity vehicles itself, it serves an estimates of $18 billion US market, and customers are not willing to compromise on service, and they have like very good service. So this is something again which you can look into, guys. Clean energy is a very futuristic approach of investment, sustainable investment, clean energy investment. Please do not shy away from reading more about it and take opinion from our experts. Now, very quickly, I would, because I've discussed a lot about tech, I've discussed about clean energy stocks. I wanted to talk about financials. Now, these are the names which you must have heard about. You must have heard about Citibank, you must have heard about JP Morgan. Now, yearly growth for Citibank, the stocks have come down almost by 35% in 1 year. And there have been a lot of issues. Most probably, financials have not really performed well since the interest rates have been at record lows. So, and most importantly, the trading revenues of financial institutions have suffered, except the last quarter. The last quarter it was good, but then before that, the trading revenues were slightly lower. So we have seen a lot of financials coming down, and something like Citigroup, which is down by 35%, uh, can really catch your eye, because Citigroup, as a company, like if you see their credit losses, the allowance for the credit losses which they have kept aside, it is around $28 billion, and this was at the end of second quarter. They have reserve bills of $4.9 billion, $5.5 billion, respectively, if you see in the first and second quarters. So now the bank has already stated, they have announced that they have received a fund custody license from the Chinese Regulatory Commission, and it has become the first US bank to earn that kind of distinction. So basically, it can help them to expand, and something expanding in China. See, I'm sure a lot of you have thoughts about and doubts about what happens to China, what happens between US and China and the trade war. Uh, don't forget that what we are discussing, ahead of us in October, there's earnings season. In November, there's US elections. US elections will weigh more than anything on the stocks. So we will do a separate session on the impact on equities and what sectors you should look into before the US elections comes in, because it depends whether Donald Trump is going to be elected or Joe Biden is going to be elected. We don't know who's going to get elected because the polling are very close. And frankly speaking, nobody had expectation from Donald Trump in last 2016, but he came across, he got elected. So there will be a lot of volatility coming in during US elections. We'll have separate sessions for that, where we'll discuss that how you can diversify your portfolio during US elections as well. For now, what you can see is the book value of Citigroup. It is really cheap. It has fallen more than a third in 2020. So uh, normally their value is very attractive. They are on the verge of expansion in China, and it's kind of a good thing. If there is a revival in the economy after the vaccine comes, it should definitely boost the quality of loan of the assets which Citigroup is holding. So that is also something which is really good, because they have changed their accounting rules. And once the economic outlook improves, these kind of results could eventually be released and the profits can be boosted. So for more information, again, you can talk to our consultants and we'll be able to assist you for that. Uh, Very quickly, we'll take one hotel and one airline and one financial. So I've taken Citigroup already. Uh, let's see if I can find some different sectors, because we already had tech, we had clean energy. We took one financial stock. Again, guys, JP Morgan down by 16.5%. Balance sheet is really strong, but that's why it has become one of the most favorites. It's down just by 16%. So that's something which is really valuable at this point of time. Uh, again, they have put a good amount of money aside in the first half. They have put their reserves separate for to cover the bad loans, and that is something really good. Because if the economy improves, all this money which is kept aside can be again used to boost profit. So financials like Citigroup and JP Morgan are very attractive given the stocks have come down also, and they have kept good amount of reserves for their bad loans. Uh, Moving on, now I will take one resort. We have discussed a lot about hotels, Hilton and Ascon, etc. Now we'll talk about Wyndham Hotels and Resort. And again, it's focus on budget hotels and leisure customers. They have very well positioned it. The stock is down by 29%. They have around 9,250 hotels in the worldwide. The total cash as of June is around $664 million. This is something, guys, what you can do. Your first question from me will always be that, Yogesh, is it really wise to invest into a hotel and resort company? Because it doesn't look like a very smart bet during a pandemic. A sharp decline in travel, but then understand that what kind of hotel chains you're investing into. A world's largest chain with franchised hotels. This is something which could be an exception to the pandemic, what we have been talking about, because it is focusing on budget hotels. They focus on leisure customers. There's a balance because 70% of bookings are made by leisure travels, the travelers who are traveling for leisure, uh, 70%. Now, this is a level which is much higher if you compare Marriott, for example, or if you compare Hilton, for example. Their percentage of bookings which are made by the leisure travelers, it's more than 70%, right? And leisure travel, it's a very valuable segment now. I mean, business travel has suffered a lot. If you see the numbers of the companies, you will see revenue per available room, occupancy rates, uh, key industry metrics. It has improved from March through July, and it's a very important thing. So when you see normally, so let me correct this. When I said about Marriott and Hilton, the leisure travelers in Wyndham hotels and resorts, it is 70%, which is higher. It's a very high number. But when you compare Marriott and Hilton, the numbers are subjectively low. And if you see leisure travelers from, I think, June to September, there have been a significant amount of increase pre-lockdown and post-lockdown. So that is something which you can always look into. Study the businesses of such kind of hotels, that what are they into and what percentage of leisure travels they have, and compare that with the competitors, which is really important. They are franchising more than 90%, 95% of the hotels worldwide portfolio. That is something which provides them a financial stability. If you see brands, like well-known brands which you know, like Super 8, for example, or Ramada, for example. Ramada, I think everybody knows Ramada. And then La Quinta. They are focusing on economy, and this is something, a selective service, like, for example, limited food, beverage, amenities, as opposed to full service. This is what we need to understand, because all of its US hotels, they are offering a very, very selective service. There is limited food, there is limited beverage, there are a lot of amenities, like if you compare to the full service. And such kind of hotels, they require very lower occupancy than full service properties they do to break even. So, guys, to make it much more shorter and to make it much more easier, uh, pandemic is there for for a very long period of time. It is here to stay. Uh, Companies like Wyndham Hotels, they have cut down their expenses. They have cut down their expenditures. Their cash, as I said, it totaled around $600 million. It is pretty much enough to sustain their liquidity for a few years, because pandemic is going to put a lot of pressure on hotels and resorts, um, whether it is lodging companies or anything. And these companies are open during the pandemic. Wyndham especially, they have been able to remain open during the pandemic, even when lockdowns first started to happen in late March. Wyndham stock, it has actually more than doubled from the March low. It is still down about 20% this year, but again, in the long run, the gains could be significant. So this is something which you can also look into in terms of resorts. Last one, I think, which I haven't seen here. I think it was, yeah, Southwest Airlines. Southwest Airlines, we have discussed a lot about Southwest, and if somebody has been following the webinars, you would see that Southwest Airlines have gone up from a considerable level. It bounced back, and then again, because of the fear of the second wave, it has come down. So this is the last company I wanted to discuss about with you guys. It's a domestic travel company, and please understand that domestic travel is a lot more important than international travel right now, because domestic travel is happening, but international travel is still a question of what happens to the pandemic. The stock is down 27%. If you compare year on year performance, obviously I'm sure 3 month performance will be different. So the air traffic is increasing, balance sheets are really strong, and it is expected, as from the competitors, the larger share of its pre-pandemic revenue. Uh, if you compare American Airlines, Delta, United, Southwest has performed really well. So this is something again which you can look into. These are the kind of companies, guys, which we have always talked about. A few new additions which you saw in terms of Citigroup, JP Morgan, some companies which you saw related to Datadog or Big Commerce, CrowdStrike. So these kind of companies which we did not talk about earlier, today we got to talk about. And of course, if pandemic cools down sooner than expected, then airline with a lower cost is something which you can always vouch for. And Southwest is something which can stand to gain the most. Balance sheets are really strong, much better financials. If you see, they have a tremendous cash. They have, like, if you see other major airlines, there has been a lot of cash burn, debt burden, if you see, but they have increased, like Southwest, Delta, all the airlines, their debt burdens have increased. But those companies which have enough cash to carry on that burden, let's say for the next 2 years, are the ones which can survive, right? So please understand, the impact uh, could be really severe in the next 2 years, or it can be really good. Depends a lot of what you expect from the pandemic, right? It became even in short term, Southwest Airlines has, it still remains one of the best airline stocks out there, and it, for a longer run, if the recovery happens, I think it's much more stable than its competitors, right? So this is something which I wanted to share today. I hope that people who took out time to come here and listen to me for 1.5 hours, I hope that your time has not been wasted. As I say always, if you have any issues, you want to have a one-on-one trading session, see, guys, this is just information. How much you want to invest, what is your risk. So there will always be a certain amount of risk threshold which you have to decide for yourself. You cannot just go random buy and keep it. It goes up, you make money; it goes down, you lose. If you're putting $100,000, you need to understand that, okay, if my loss exceeds more than 10,000, then I will close it, right? You don't want to hold every stock till it goes to zero. So that kind of expertise again is provided through our expert market consultants. They can tell you that what are your risk thresholds, where you should book your loss and move on. Again, it depends a lot on your risk appetite. They can identify strong support and resistances to show you that where are the profit booking levels, where are the loss booking levels, something which is an added support from our end. So those people who could have, might have missed or in hurry or left, please, I'm not sure they will be listening right now, because I saw a couple of listeners. They texted me here on the chat that they need to leave, I think. Yeah. So we are done with the session anyways. You can find the recordings of this session on YouTube. More importantly, if you have any doubts about any kind of strategies and portfolios and your exposure, please reach your relationship manager out and we can have a one-on-one session, face to face on Zoom, or if you want to come to the office, you're most welcome. We are working on Fridays as well, and we are definitely taking a lot of precautions. I'm here in an enclosed area right now, but we are wearing our mask, we are protecting ourselves, and we are making sure that everybody remains protected. So once again, on behalf of Century Financial, my team, myself, big vote of thanks to anyone who is into the medical industry or has relatives or friends who are into medical industry. Thank you so much for risking out your life. Um, this is something which is a great heroic act. The medical professionals are performing right now, so they deserve a really big round of applause and a big vote of thanks from our entire team. I wish you a great health to all of you and your friends and family. Please reach me out. Stay safe. Most importantly, please avoid gatherings and follow the rules. Maintain social distancing. This is something which we have to fight together. So stay safe. More importantly, please stay invested. That's really important, right? So I'm assuming there are no more questions. If you have any questions, reach out to your relationship managers and please fix your meetings with me. We'll have one-on-one conversation on Zoom and in office, and we'll definitely discuss about this further. So we will meet next week once again with a different topic. I discussed about market neutral strategies before. This is something which we will go ahead and continue on 23rd, I think, the exact date, which will be next Wednesday. That's right, that's 23rd September. So same platform, your RMs will keep you in touch. Please join again and we'll meet on a different time, but definitely with a different topic and with a lot more information about how markets are going to work. Thank you so much. You have a really good evening going to work. Thank you so much. You have a really good evening.